Good evening. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean we actively covering our positions in asset classes like gold, silver, platinum, palladium, oil, oil-related spreads, base metals, foreign exchange, equities, exchange traded contracts, contract for differences, and many. God willing, we would be adding more asset classes in the near term. We are waiting for the right time to come and when we would be adding more asset classes in our kitty. By multinational, I mean we actively cover our positions in different continents like United States, European Union, and Asia Pacific region. But having said that, I repeat, having said that, I repeated many times that we are a proprietary hedge fund. By proprietary, I mean to say no third party, that we repeat, no third party can invest capital in our funds. Treasury Consulting and none of the subsidiaries of Treasury Consulting. I repeat, Treasury Consulting and none of the subsidiaries of Treasury Consulting is inviting any form of capital from any third party. Please take a note of that. Please. You know that effective 2018, I am covering the startup story worldwide. And as we speak, the startup story is coming to an end. Not a single day in the last 2 to 3 months, not a single day I have seen when one or other startup is not cutting the jobs. Now, when I speak about startup story, I am talking worldwide. I'm not restricting myself towards India or United States or different parts of the globe because majority of the startup story is same. That is, it is based on valuation. It is not based on profitability, it is based on valuation. Today, 11th December 2022, when I was doing my research on the Google, like I told you that every day I spare 2 to 3 hours doing my research on the Google, I got to know that FTX, the bankrupt crypto exchange, the research arm of bankrupt crypto exchange Alameda, invested rather loaned one other website or a crypto portal. And today, this thing came into the picture. And one thing I always surprised that the corrupt and compromised media like Bloomberg, who always invite the banks who are having fraud background, gave sufficient hype to FTX. And see, after FTX bankruptcy, there are many other crypto exchanges who became bankrupt. And at the same point of time, there are more news, fraudulent news, not investment friendly news, which are coming up in the public domain. One of the lovely startups, I would say, are startups to whom I loved is Paytm. I love Paytm because the annual revenue of the Paytm is somewhere 3,000 to 4,500 crores. This is what you can say. And the beauty is that a startup who holding 3,000 to 4,500 crores of revenue is being listed at 2150. I can show you n number of government companies in India, n types of government companies in India whose annual profit is more than what the annual income of Paytm. Like one of them is the Indian Oil Corporation. Let's take an example. Indian Oil Corporation, as we speak, it is trading near about 77 to 78. And I know that majority of the Indian investors do not know how to study the balance sheet. Rather, they hardly bother about the balance sheet. They believe that they are completely dependent on media. And if media is going to be putting this into the picture, they are okay. But if media is not putting this into the picture, they are not okay. You would be very surprised to know that Indian Oil Corporation holding a balance sheet of more than 500,000 crores. You heard me very right. 500,000 crores is the balance sheet of Indian Oil Corporation. Amongst the most profitable companies we are having in India, business model is stable, profitable, operating across the globe, old company, government company, sovereign immunity, sovereign rating, and see the stock 77 to 78. On the contrary, if you see Paytm, a loss-making company audited by Big Four, and I need not to tell you that the credentials of Big Four. Very recently, KPMG, PwC, EY, Deloitte, BDO, GT, their names are coming up in the public almost on a frequent basis. Yeah, you need to do the research, you need to open the Google, you need to check the facts, figures, and everything. You would get to know yourself. Paytm is an organization who holds negative retained earning of 16,500 crores. You heard me very right. Paytm holding negative retained earnings of 16,500 crores. The interesting fact is, even after having a negative retained earnings to the tune of 16,500 crores, Paytm is still considered as a going concern in their annual report. I don't know for what we are waiting. Probably we are waiting for another Satyam. We are waiting for another Diwan housing. We are waiting for another infrastructure leasing. We are waiting for another Yes Bank. Or maybe I don't know for what we are waiting, because my accounting intelligence is saying that if a company having 16,500 crores worth of negative retained earnings, and more importantly, the company registering losses quarter after quarter, which means the performance of the company is negative quarter after quarter. In this eventuality, company, technically speaking, cannot be considered as a going concern company. In any eventuality, such a huge losses the company is having in its books, the stock which was listed at around 2150, and as we speak it is near about 500, which means around 75%. I repeat, 75% of the investment value has already been eroded. Then how can you say that this company is going to be a going concern company? But yes, one thing I'm sure, I'm always comfortable, is that the big fours can always say that. EY, KPMG, Deloitte, and PwC are having separate accounting books which are applicable on them and which are not applicable as far as accounting framework is concerned. So guys, please do remember that Paytm holding 16,500 crores worth of negative retained earnings. And every passing quarter, this money is growing, which means the accumulated losses are growing. Common sense, a day would come when you will feel that these losses, which is currently 16,500 crores, would grow to 20,000 crores. Then it would grow to 25,000 crores. And then the people will issue the red flag. But by then, millions of investors, I repeat, millions of investors would have lost their money. They have already lost. 75% of the investment value has already been lost. But the beauty is no one covering this issue. I haven't seen a single media person. I haven't seen a single media channel. I haven't seen a single newspaper, single magazine, single interview, a single person who dare to speak that what the hell is 16,500 crores. Rest is all your job. I'm not at all worried because I not invested a single rupee in the Paytm. Because my target price of Paytm, I can't tell you, but I'm not going to be investing until I'll get at my price. And I'll get my price because when it is issued at 2150, people invested. I want people. But today, where are they? The rest I would be covering in the second part. Around last week, Paytm declared their buyback. What is buyback? Buyback means whatever floating shares who are in the market, whether these floating shares are held by institutional investors like SoftBank, probably Sequoia, or any other institutional investors, or whether they are held by retail investor, the company would be buying back. We have seen that in the last week, a trend has started in India. And the trend is the loss-making companies are doing either the buyback or the stock split or the bonus issue. Like one of them is the Nykaa. 99% people are thinking that Nykaa is not a loss-making company because people do not know there is a concept in accounting called negative retained earnings. And until otherwise, I repeat, until otherwise, we not knowing this concept, there is no point knowing that Nykaa is a loss-making company. We have seen many startups in India, like if you check the share price of Delivery, if you check the share price of Paytm, Policy Bazaar, Nykaa, Cartrade, and any startup, Zomato, you will see that investors only lost it. Investors not profited it, they lost it. But unfortunately, no one, neither in the regulatory framework nor in the media, are coming up and taking the responsibility of the same. And now Paytm is doing the buyback. Now, buyback requires money. You can't buy back free of cost, right? I'm not comparing at what price they are doing the buyback. They are doing at 400, 500, 600. That's their call. I hardly bother about that. But my concern is the money, from where the money is coming. Who is funding this buyback? Because Paytm is a loss-making company. And a company who holds negative retained earnings of 16,500 crores. I repeat, negative retained earnings. Then it's a mere miracle that they would be able to doing able to do a buyback from their PAT. PAT stands for profit after tax. It is also known as bottom line in our parlance. SoftBank already quitted Paytm. Very recently, they sold their stake, considerable stake, as a block deal. Who is funding Paytm? Who is funding Paytm? That's the more important point. I tried on the internet about who is the funding partner of this buyback. And interesting fact is I got no data. And I was aware that I'm not going to get any data because the balance sheet of the Paytm, I repeat, the balance sheet of the Paytm is not in a situation to support the buyback. And since balance sheet is not in a position to support the buyback, I'm telling you the regulator would be approving this. I'm telling you right now they will get the approval of the buyback without even investigating from where the hell money would be coming. Guys, I just wanted to tell you one thing. We are living in an environment whereby we are surrounded by the people. I repeat, we are surrounded by the people who are saying anything. And the beauty, investors are investing. I have an evidence. You know that I never speak until I hold an evidence. Whenever I comes in public, I make videos, I speak on social media, I always have evidence in nature. A few days ago, I went to internet and as always, doing my research, I got a very fantastic document. And that fantastic document is about Citibank. You know, I love three banks. One is the Citibank, one is the Credit Suisse, and one is the JP Morgan. Why do I love these three banks? I love these three banks because there is a race which is going in these three banks. And what is the race? The race is that who is more fraudulent? Who would be doing more scandals in a given period of time? But as we speak, it is very difficult for me to explain because Credit Suisse, JP Morgan, and Citi all at our par. And interesting fact is all three operates in India also. JP Morgan Chase have their brokerage in India. They have their complete banking setup in India, operates from Mumbai. As a corporate treasurer, I also dealt with JP Morgan Mumbai for around 7 years. I know people personally. I dealt with people in Citibank. Credit Suisse having a brokerage setup in India. Rather, they have their back office in Pune as well. You would be finding interesting to know that UK regulator, Financial Conduct Authority, I'll make a separate video on this topic. Financial Conduct Authority has fined Citi Group Global Market Limited. I repeat, Financial Conduct Authority has fined Citigroup Global Market Limited around 12.5 million GBP. I repeat, 12.5 million GBP for failing to properly implement the market abuse regulation trade surveillance requirement relating to the detection of market abuse. I repeat, Financial Conduct Authority has fined Citigroup Global Markets Limited around 12.56 million GBP for failing to properly implement the market abuse regulation trade surveillance requirement relating to detection of market abuse. And this is the same Citibank, alongside JP Morgan and many other foreign brokerages, who openly gave the targets of the Paytm. Rather than talking about the losses of the Paytm, rather than talking about the negative retained earnings of the Paytm, rather than covering the annual revenue of the Paytm, rather than covering the business model of the Paytm, it is the same Citibank who hyped Paytm. And I'm sure that millions of investors, I repeat, millions of investors would have invested thanks to Citibank. And see this Citibank, it's not the only labs we have in Citibank. If you got some time, please open the Google and check yourself. If you open the Google and check yourself, you would get to know that Paytm is being hyped by many foreign brokerage houses who are having fraudulent background. These brokerage houses fined by multiple regulators, but still they hyped Paytm. And this is yet another evidence I'm holding. In case anyone from Citibank feel offended, in case anyone from the Citibank thinking that this is not a right information, if any of the Citibank feel that they don't have a history of fraud, market rigging, corruption, scandals, fines, and all these things, you have my number at the end of the video. I am ready to take your challenge on record. I repeat, on record. But yes, after the announcement of the buyback by the Paytm, one thing that really surprised me is in India, anything is possible. Even after losing 75% of the value, even after losing 75%, Paytm have guts to do the buyback because they knew they would get regulatory approval. Not a single executive of the Paytm is fined. How come the stock price, which was at 2150, today at 500? Not a single. Not a single brokerage house in India, whether it is a foreign brokerage house or it's a local brokerage house, fined because of Paytm. And it would never happen also. Investors would continue to lose as always. This is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 9899 242 978. In case you would like to have more information about Treasury Consulting, you can visit our fixed income platform www.fixedincome.global. www